lots of stocks to watch out for. Let's get into conversation with Parag Thakkar, Senior Fund Manager at Fort Capital, to get a better sense of how some of these stocks could trade in the market and what is the near-term view when it comes to the fundamentals behind some of these stocks. Parag, hi, morning. Let's start by talking about the IT sector and your view on Indian IT. Now that Accenture has reported better than expected numbers, how do you think that is going to have, or if at all, it's going to have any impact on Indian IT?
So I think we were buyers when the Infosys, TCS, HCL Tech, and Tech Mahindra were offering 4.5% dividend yields. Now the stock has moved up from there, and Accenture results were good, but they have not increased the guidance, and they have also said that the demand environment has not changed. So I think it will be a mixed bag. Of course, rupee at 90 will help the earnings of Indian IT services companies. But I would like to say that we have, for example, Infosys, Tech Mahindra, Emphasis, and LTI Mindtree in our portfolios. And we might trim them also, depending upon how the price operates. So I would not like to recommend any stock with thumping the table buy kind of thing, because I feel that tactical rally, which was due because of very low valuations, has already started. So I would not like to say that now it is a great time to buy.
Okay, so that's your take on Indian IT. Parag, let's talk about some more stocks and some more sectors that could be in focus today. And a bunch of new additions is what we're expecting to see to the FNO segment on the last day of this year. Weigh in your thoughts on something like a Swiggy, Premier Energies, Bajaj Holdings, and Vari Energies, the four names that are going to be included. What is your view on some of these stocks and any major impact to these stocks on the basis of this FNO inclusion?
No, it will, of course, obviously improve market participation and liquidity. But we don't own the stocks, so I would refrain from recommending anything in the stocks, because we don't own the stocks in the portfolio. Of course, Bajaj Holding is a great company, and it holds shares of Bajaj Auto, Bajaj Finserv, Bajaj Finance. So it's a good buy, but not sure about the valuations at which right now the discount to NAV is not that much as at this point. So I would not like to recommend any of these names, but I would like to say that, see, of course, liquidity will definitely improve for sure, and market participation will also improve. But let's see, I think, because we don't own this stock in our portfolio.
Lots to talk about. Let's take a look at some of the stocks that could be buzzing today. And Kunal, give us your view on Vodafone Idea. We're aware you have a view on this stock. The Vodafone Idea's wholly owned subsidiary, which is Vodafone Idea Telecom, has issued NCDs worth 3,300 crores, a debt fundraising happening over here. Kunal, your take on the charts on Vodafone? Any renewed strength if you're seeing on the charts now that we've got source-based information as well, that there could be a moratorium from the government for Vodafone for the next 4 to 5 years? That's on the fundamentals, but is any of that optimism reflecting on the charts?
Absolutely, yes, Sneh, because if you look at Vodafone Idea over the context of the last 1.5 odd year, the stock has done very well for itself. The best part is that the stock has lost its erstwhile nature of being very high beta. It's been a very consistent stock, trended quite well, not participated in terms of very high zones of volatility. We've seen so far recently also the stock heading very close to that 12 mark. I think 11.85 thereabouts was the swing high for Vodafone Idea. And from there, the stock has cooled off again. But I believe that it's a zone where the stock is consolidating. I strongly sense that we are looking at a potential change of trend for Vodafone Idea, something which could probably have an impact for the next, many quarters and maybe couple of years to come by. So bullish on the stock in the near to medium term. It's just that on the short term charts, this 12 to 11 range could be more or less a grinding range for Vodafone Idea. And once the stock scales past about the 12 mark, that's where I would believe that you might probably expect the second round of momentum to come by into the stock price.
Okay, so that's on Vodafone Idea. But keeping with the telecom pack, we have news from Bharti Airtel as well, wherein they've announced management rejig. Shashwat Sharma has been appointed the CEO designate and Akhil Garg appointed as the CFO. They've also entered into an amendment shareholder agreement with Bharti Telecom and Pastel, which is Singtel, which are the promoters of Bharti Airtel. Parag, your view on Airtel and overall the telecom sector, how the duopoly is playing out, and what room could Vodafone now have given this moratorium could come into place?
Yeah, so basically, Vodafone we don't own in our portfolio, but my overall broad view is that the intent of government is there to protect the company. So I would like to believe that Vodafone will survive, and we have Indus Tower in our portfolio, and so we remain constructive on Indus Tower because Vodafone is one of the key client. And of course, we are playing it through Reliance, which is our top holding, the entire telecom space. And Geo platform IPO is also expected in next year, the first half. So, and we see big value in Reliance as of now.
Okay. And Parag, your view on Ola Electric, given the 3 consecutive days of stake selling that we've seen from promoter Bhavish Agarwal, now the company has come out and said that this stake sale activity is over, but they've raised more funds than were required to repay that original debt amount of 260 crores. Your view on Ola Electric, and when do you see its operational issues getting behind Ola, or is that some time away?
See, in this new IPOs which are getting listed, and especially, so I would not like to comment on any one of them specifically, but I would like to say that investors need to be very, very cautious. When the IPO comes, the promoters can make a lot of commitments which are very difficult to fulfill. But I would like to say that so we don't have this stock in the portfolio, and we don't intend to buy also. And my view is very simple, that your investment philosophy should rotate around the people, the business you know and you understand, and you have seen through the cycles, and not venture into everything which comes out new. In fact, I would urge people to look at their portfolios and see the some of the stocks which they have forgotten and the stocks have fallen. And there might be some value there if it is an old company, if it is a company where we know the promoters, we know the business, and the valuations have become extremely attractive. And people are selling those stocks just because of fatigue that they have not moved from last 1 year. In fact, it is a time to look at your own portfolio and see some of those stocks can actually do well rather than buying these new stocks every day. See, ICICI Pro IPO was a different thing. We know this company, this business, this fund managers, and this entire management team from last so many years. And they have demonstrated that they have through the cycles they have protected investors' capital and given decent returns and decent alpha. As they say, 90% of their funds have outperformed in last 3 years. So I would say that that is a different issue. But whenever anything new comes, it is human tendency to get excited. And then you can see the losses which come, right? So I would say that I would urge people to please, before any IPO, just do your homework better. And especially if it is a loss-making company, you have to do even more work.
Right. Parag, you did say that there are some companies who have very strong managements. They have taken their investors through volatile business periods and come out victorious. Give us a few examples, if you can share some names that investors should now be looking towards, strong companies with strong moats.
So basically, so in my view, for example, maybe I cannot tell you the names, but some of the stocks in FMCG space, for example, they have not done anything from last 4 or 5 years. Now, if you see in Q3 after the GST cut, in Q2, what happened was there was a destocking, right? Because the distributors, the retailers, the entire ecosystem, they were destocking, and so Q2 results were very bad. But in some of the cases, I expect that from Q3 there will be a good recovery. So I would say that FMCG companies which have fallen a lot or not given any returns in 5, 6 years, some of those are looking really interesting at this point from valuation perspective, and from the fact that from Q3 they might see recovery in earnings also.
Okay, so FMCG and staples companies looking good, but let's shift focus. And while we're talking about the consumption space, let's throw the spotlight on consumer durables play of Voltas. They've held their analysts meet, and here's what the management had to say. They believe that room AC volume continues to remain under pressure even in the third quarter due to higher channel inventory and the strong winter that we're seeing taking off in most parts of the country. The year-on-year decline, however, has moderated due to the GST cuts coming into play and energy label changes changes as well. Their durables arm, Voltas Beko, which is the household appliances arm, it continues to outperform, gaining market share. And Voltas Beko is nearing the #1 position in semi-automatic washing machines. From their EPM segment, they're saying domestic project business is doing well. Margins are looking steady over there. Industry decline, however, for the overall business on the positive side will be lower than what they've seen in the first half of this financial year, and is going to be better than earlier estimates as well, is what the management has said. So that's a big positive coming in on the management commentary. Other than that, they've also said that inventory levels will normalize gradually from January of next year as demand picks up, and they're saying GST reduction has also improved the room AC affordability by about 7 to 8%. On the back of this, they are going to be evaluating differentiated pricing strategies for old and new label products, and they also believe that the next levers for growth could be improved capacity utilization, scale benefits, cost optimization, and this is going to be aiding absorption of cost pressures as well. On the inventory front, they've said that aggressive inventory buildup is not expected going ahead, and gaining market share continues to remain the #1 priority for them. On the back of this, we've seen some brokerage view coming in from Motilal Oswal, wherein they've maintained their neutral rating. They're still cautious when it comes to this stock, and they're gauging what the numbers could be looking ahead. Target price has been maintained at 1390 rupees per share. Nuvama continues to be positive or negative. They've maintained the reduced rating, and they've also cut the target price to 1,170 from 1,200 earlier. Lastly, Citi continues to be bullish on the stock. They've maintained their buy rating, target price unchanged at 1775. So that's the take coming in on Voltas, their analysts meet, what the managements had to say, and what the brokerages also have to make on this. Kunal, your chart check on Voltas compared to other consumer durables players like Blue Star, Crompton, which one stands out?
See, I think actually at current levels, I actually believe that Voltas is a much more better name out of the names like Havells or Blue Star, etc. Because Voltas on the short-term charts, for example, has confirmed a breakout of a triangular pennant formation, and the last I think if I'm not wrong, 7 or 8 days, almost consecutively, we've seen the stock showing signs of a steady uptrend. And remember, in the last 7 days, the markets have been very volatile. So, which means that there has been a consistent buying pattern for Voltas which we've observed in the last 7 or 8 days, and that has managed to lift off the stock from an underperforming zone to a slight moderate performer. The stock crossing 1400 levels yesterday, I would believe that there could be a sign that maybe the stock is getting ready for a breakout of sorts. So that first path of recovery, I think, is set a base just around the 1350 odd mark broadly. That's also established for Voltas. I would now believe that the second leg of uptrend, which is where the stock gains momentum, shows good price action volume action in the near to medium term, that will follow up for Voltas. So would be bullish on the stock at current levels. Broadly, 1450, 1460 could be the first target, which I would peg as a buy for Voltas.
Okay. All right. Some of the other counters that also could be well in focus is the Ramco Systems. They've been selected by Powerhouse Engines for next-gen aviation MRO software. So that one also will likely be on the list. It's also Indigo, which now claims that operations have normalized with regard to their flights. They're doing 2,200 flights every day, and we saw some positivity on that counter for now a couple of days on the trot. Kunal, Indigo at all on your list for today in terms of a trade?
Yeah, it can be. In fact, we've seen the stock recovering quite well around the 5,000, 5,100 mark. Interestingly, I was just looking at the charts even in the last couple of days, and there was this gap which was created for Interglobe Aviation. That gap for the stock, and in that leg of price correction where the stock fell from 6,000 or 5,800 levels to 4,600 mark. In between, there was the gap for Interglobe Aviation. That gap is around 5,250, 5,300 levels. Ideally, in ideal scenarios, when we see a bounce back for the stock price, the bounce back comes very close to the kind of a gap range for the stock, and that's where the stock takes a first round of major resistance. We are almost at 5,100 for Interglobe Aviation, so which means potentially, I would believe they say in the next 1 week, couple of weeks, you could expect that the stock moves towards filling the gap of 5,250, 5,300 mark. That should be a decent upside of 150 to 200 points for Indigo in the very near term.
Okay, very quickly, Parag, do you have a view with regard to Indigo and this dip that we've seen in the stock price? a good time to actually accumulate a Nifty 50 name?
Yeah, it might be. I would say it's a good company which has survived the bad times earlier also, and this time also it might come out stronger. But we don't have it in the portfolio as we have many other stocks which we are looking. So basically, from sector specific, I can tell you FMCG, auto components, select pharma names are looking very good. So I would like to say that we have enough on our plate, and we are actually fighting for cash in the portfolio.
Okay, so that's the take on Interglobe.